Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John, and Happy New Year.
Yes, Happy New Year to you too, and our listeners of Discovery Watch. It's a pleasure to be on the show.
John, after a 5-year run with a show featuring 2 or more resource juniors nearly every week, today is the last Discovery Watch show. What was the inspiration for Discovery Watch?
Well, Jim, back in 2016, Tom Allen, the producer of HoweStreet.com, approached me with an idea to do a show based on resource juniors. Now, HoweStreet.com has interviews with all kinds of macro, big picture type topics, but there wasn't really anything that dealt with discovery, exploration juniors. And we had been in a 5-year bear market that began in 2011. 2016, gold had started to rally, and the market was looking like we were finally coming out of the bear market. And by the way, in the resource junior sector, a bear market never historically lasted more than a few years. 5 years was pretty long time for a bear market to persist in the resource juniors. So we decided to do this show where we would focus on companies, individual companies that either had an unfolding discovery or potential to make a discovery. So this is the group of companies that generate a target, that explain what's going on. And of course, they're priced very cheaply at the time. And when they make a discovery, they go take off and get a much higher price. So the idea was to develop an audience of people interested in these earlier stage type juniors. And the business rationale was, well, Tom would sell advertising on his platform. Some of them would also be inserted into the interviews. And for me, having this public venue to talk about these juniors in an area that I really like, which is discovery exploration, well, hopefully that would drive subscribers to Kaiser Research Online, and sustain the revenues to keep my operation working.
Why is Discovery Watch ending?
Well, the incorrect assumption Tom and I made was that we were on the threshold of a turnaround for the resource junior sector back in 2016, September 2016, when we did the first show. Unfortunately, that rally fizzled, and we had another 5-year bear market following that. And it was looking really grim in March of last year when the COVID pandemic erupted. But then we had this tremendous rally when gold charged to $2,000 in response to all these pandemic measures, and the juniors came alive. We had the biggest funding episode or window since 2011. Companies were cashed up, but since April of this year, everything has been in this almost relentless downtrend, and we have one of the more lucrative bottom fishing seasons this year, as most stocks are being sold out either by the funds that are doing their window dressing so that they don't have to explain why they have a loser in their account, and also people collecting tax losses from stocks that they had bought at a higher price to offset the gains that they had made earlier in the year. And so Tom, meanwhile, was losing advertisers on his platform. Discovery Watch, I don't think, was a reason for that, because it was just one of many different speakers that he was doing interviews with. And my subscriber base was also sinking rather than growing, despite the small blip last year when it looked like the bear market was over for the resource juniors. And so Tom and I talked about this problem, and I'm putting tremendous amount of work into preparing for this. It wasn't really growing a subscriber base, and Tom was also putting in the work and money to produce the show and not having the offsetting advertising revenues. And there were also some significant changes that I'm incorporating for Kaiser Research Online. So we decided that we would end Discovery Watch as something produced on the HoweStreet.com platform.
What changes are you contemplating for Kaiser Research Online?
Now, Jim, one of the things that has really become apparent in the last 5 years is that the audience for resource junior speculation is shrinking. And what was left was quite reluctant to pay for stock picks within a sector that seemed trapped in a permanent bear market. Normally, your subscription interest in stock type picking services such as a newsletter rise when there's a bull cycle that also has a rising tide that makes everything go up. And people, when they buy, they make money. But the resource sector has become a very difficult place to make money, with a tiny percentage of companies dominating the fundraising, and the rest never raising quite enough money. When they do raise money, it's usually with a warrant attached, and 4 months even before the expiration results are known, comes free trading. Then everybody clips the warrant and flips the stock, dumps it, and these poor juniors get stuck in these dilution treadmills. And the sort of speculation cycle about expiration programs that we used to see in the past few decades, since the 80s when I started in this sector, these weren't really happening with the juniors. And the other thing that became very clear, that those audiences that were interested in the resource sector, new ones coming in, they were more momentum gamblers, not fundamental outcome gamblers. And the resource juniors, they're all about slow motion expiration programs, the outcome unfolding in slow motion. That requires patience, doesn't really give you an adrenaline rush, and that really, the sector was really unsuitable for this type of audience. And the way the sector adapted to it, we started seeing these free websites emerge where they're not charging the audiences, the subscribers on the list or whatever, any money. They get to sign up for free, and it is the companies that are paying the website, they're sponsoring the website to talk about these companies. And an additional thing that's quite interesting that's happened in the last 5 years, influencers have emerged within the whole social media network. And when one of these big free sites puts out something, call it a pump, the stock starts going up. But because you don't know when the dump will take place and the stock retreat, it becomes a self-fulfilling prophecy. And the influencers would also talk about it, and they would introduce the story to bigger audiences who would come in. So these pay-to-play type sites were actually able to generate upside momentum for companies that would go a reasonable bit before they would fizzle. So the people coming into the resource sectors, why do they need to pay $450 a year to Kaiser Research Online to follow his several dozen favorites, which are not particularly doing anything at the moment? In fact, last year, the whole group of 30 so companies was up 100% at the end of the year. This year's batch is down 10 to 15%, and there's only a one or two stocks in it that are like reasonably significant winners. So as I reflected on this situation that people don't really want to pay for stock picks anymore, I thought about the two things that I really like about this resource sector. And one is that I'm an information hound who likes to compile information, categorize it, and then search through it to look for specific combinations of factors that tell me, oh, here's a stock that is going to go up, that's undervalued. And the other thing, which is what I started way back in the 80s, was something called the long shot list, which became the bottom fishing list. I really love finding these flatlining, overlooked companies, figuring out what's wrong with them, talking to management, trying to see what can change to make this thing go into a speculation cycle. And these two things, they were really important to me. This is what I want to do, trying to come up with a couple dozen favorites and then hoping that they go higher rather than sideways or down. That wasn't really an awful lot of fun, and it certainly wasn't turning into a profitable business in terms of subscription revenue. And several years ago, I created a Kaiser Research Online Slack workspace. And Slack is really intended for businesses, but they also have a free version that allows you to see the most recent 10,000 postings to it. This space now has 28,000 posts in it, so the first 18,000 are no longer accessible. But it exists parallel to Kaiser Research Online, and a paying member gets to be also a member in this Slack workspace. And there's about 24 or so channels with different topics, including bottom fish and favorites and critical metals and geopolitical stuff. And people can private message each other. They can private message me. They can post questions. Only a tiny percentage of the people actually post. Most are lurkers. But the way it has operated, it's become a sort of like a private salon. There's none of this obnoxious behavior that you see out there in the public forums, and it's become a very collaborative, interactive experience. And the problem that I was having this year, though, that was making me wonder about the future of Kaiser Research Online in general, was the website sat on an aging server, physical server. It was not serving results quickly, sometimes not at all. There were some sort of security issues, too, that made people not be able to see certain pages depending on their browser settings. And the model that I had developed in 2005, which was that of an information portal covering all the Canadian resource listings and added the Australian ones in 2016, search engine to allow you to search this. It wasn't built till 2011, just in time for the bear market. This model, which was also the basis for me filtering through and finding all these bottom fish, this was failing, and because the website was on this physical server. And fortunately, in June, the original designer of the system was able to join me to do a migration into the cloud. And of course, like all things that have the word IT associated with it, a 1-month project has taken almost 6 months to complete. But the website is now in the cloud, and it's going to be cleaned up further in the new year as we do some enhancements with the cloud. And this also solves a problem that developed with COVID, because all the databases maintained offline in my database system. So certain things require inputting, updating to be done physically present in the office. And of course, COVID really messed that up. Now with the whole thing online, it can be developed to allow remote workers. So one of the new things that's going to happen in 2022 is we're going to start catching up on some of these projects that have fallen behind with companies where you have to do it directly in the database. But as I saw that, okay, the whole idea of a research platform is back in action, I want to get away from being a stock picker. I want to sell this at $2,000 a year to high-end, high net worth investors, family officers who are using it as a tool to research the resource sector and make their own decisions. They really don't care what my opinion is about anything. So that's sort of the long-range goal. But then I also thought I really enjoy being a bottom fisher, and I have a group of subscribers and former subscribers, some of whom are coming back, who also like to do this. They have the sophistication to understand what an imperfect company is, what a missing piece is. Your usual subscriber that comes in looking for your top picks in a bull market, they are amateurs. They want everything to be correct. They want the stock to go higher right after they buy it. They don't have the patience to understand what the missing piece is. So the big change that I'm doing heading into the new year is I'm changing the definition of Kaiser Research Online to being this do-it-yourself research platform, in a corner of which I operate a bottom fish incubator. I spent the last 2 months going through all the Canadian listings and came up with about 175 companies that I've tagged as bottom fish. I think bottom fishing season is going to extend into the new year, beyond the tax loss window dressing period. And I'm going to go after that type of audience. But the radical change that's coming in the new year is that I will publish a list of Kaiser Research Online favorites that's free. Now, it's not going to be 30 companies like it has been in the past few years. It's going to be a much shorter list, less than a dozen companies. And these are companies that are, in effect, graduates from the bottom fish incubator companies that finally got their act together, that have got the financing in place, their story advancing, companies where I can say this stock should be a lot higher than it is now, and is no longer this bottom fish going sideways. And the business rationale becomes one of the audience I'm seeking are those who want to rummage through the bottom fish incubator, discuss what's going on with these companies, make their own bets, accumulate these things. And when these bottom fish get their act together, they've usually delivered a 200 to 500% gain from the bottom. And that's when I would put them out into the public frame, say, okay, this company has it all together. It's no longer a bottom fish. And I can also, if something like a Great Bear comes along that wasn't a bottom fish for whatever reason at 20 cents, and now it's at $2 because it has a great new discovery, I can directly add that if I think it's going to go to $20 or higher. So that is the significant change coming for 2022, free favorites, and that I will continue to cover and write about. And then this bottom fish universe within the whole do-it-yourself research platform, for which people will, until I switch to $2,000 a year, will still be able to pay $450 a year. And as long as they renew, they will be grandfathered indefinitely at that rate.
We'll have more with John Kaiser right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with John Kaiser. This seems like a bad time to discontinue Discovery Watch, but you have a new show planned that will be called Kaiser Watch with Jim Goddard and John Kaiser. How will that work?
Well, the problem with Discovery Watch was that it was company specific. And if I wanted to talk about some macro thing like uranium, I had to kind of shoehorn this into a specific company and talk about it that way. This new format gives me much greater flexibility. It will have 3 parts. The first part will be a sort of a big picture general question. It could be about what's happening with Ukraine and Russia. What are the implications for the resource sector? And that's a question where you can come into play in a major way. One of the frustrations with Discovery Watch was that the topics that I talked about were so specialized that you weren't really able to contribute much in terms of follow-on questions because it was so specialized and obscure. But you are a journalist with a very broad awareness of current affairs. You talk to all these other speakers. You're aware of different opinions. So the first question will become kind of like, okay, what is the topic of the week? What a permitting issue? What takeover bid has happened, and what does it mean? What geopolitical event? Whatever it is that seems topical for that week. The second part will be questions about, is anything happening amongst those free KRO favorites? New developments, the stock was up, was it for a reason? Bad developments, talk about that. Any additions or any deletions? And then the third part will be a standard generic question about, is there anything happening in the bottom fish incubator that I'm willing to share? And that will allow me to talk about one or more of the bottom fish that something interesting is happening. And that becomes the business rationale for me, because everybody gets the other stuff free by simply listening to the show. But if they want to get into the sort of earlier stage bottom fish conversation, well, that's when they pay the $450 to become a member, and hopefully they own one of those when they graduate to the Kaiser favorites list, where they're still expected to have double, tripling potential. And we will post this on my own YouTube channel. We'll try to do it on a weekly basis. So it's kind of a new version of Discovery Watch, but with greater flexibility. I have to thank Tom Allen for the last 5 years for for hosting these Discovery Watch episodes and having them on his YouTube channel. And I hope to be able to continue to do sort of periodic interviews on shows of his, such as This Week in Money, going forward. But Kaiser Watch will be completely independent, and it'll be Jim Goddard and John Kaiser talking about this, big picture topics, the Kaiser Watch favorites, and then whatever sort of teasers I want to talk about in the subspace of the bottom fish world.
John, before we go, can you give our listeners one Discovery Watch stock that will make it onto your 2022 favorites list?
Yeah, all the companies that will be favorites, the initial batch of favorites, will be companies that were at one time and perhaps still are featured on Discovery Watch. But the one that I think will be a standout next year is Verde Agritech, which has the billions of tons of glauconite in Brazil, which it now grinds up and sells in its original ore form without any processing, sells it to the farmers in Brazil. And that this year was a breakout year for the company, thanks to the potash price crisis that has enveloped the world. Their problem has been getting the farmers to do repeat business, to adopt this. Farmers are not a particularly aggressive bunch. They are quite conservative. But this crisis, this potash price crisis in Brazil, is accelerating the demand for their product, and they got the permit to do a significant expansion, which will be done by the middle of next year, and that will allow this company to really start doing the cash flow and revenues that get the market curious about it. And it's a stock that I think has $50 plus future potential. That's not going to happen overnight. But because you can see the scalability of this and the fact that it would replace much of Brazil's import dependency if it gets adopted, I think this story will capture the market's imagination. And the company also has that word agritech as part of its name. It's not just peddling this ground up green rock. They are also doing a lot of interesting things involving microbes and the glauconite as a core product. And we'll probably hear a lot more about this. And it also fits into the whole sort of ESG question, because this particular fertilizer, although it has only 1/6 the content of potassium chloride that the conventional fertilizer for potash, it does not destroy the microorganism population of the soil. It actually enhances it. And this is going to become a much bigger problem down the road when these fields, which get hammered with the salty potassium chloride, end up losing their microbe population, which works with the plant roots and liberating lots of other minerals on that for the uptake by the plants. This will help the Brazilian soil stay fertile a lot longer, and with the climate change and that happening, Brazil's going to be a place that the world depends on increasingly for agricultural products. So this particular commodity, this glauconite, Verdeci slate, as they call it K Forte, I think it's going to become something that a lot of people hear about. They're also going to wonder if there are similar deposits in other continents that could be mobilized and also used as an alternative to conventional potassium chloride. So Verde Agritech will be part of the 2022 free favorite list, and I think it'll be one of the best performers next year.
John, where can our listeners find us in the new year?
The best place to go will still be KaiserResearch.com. The podcasts will be hosted on that site in some location, and the YouTube version of the audio, I'll have the links to my YouTube channel after I figure out where that YouTube channel is that I set up years ago and never did anything. So KaiserResearch.com, go there, and everything will be there to guide you to where you want to go to get the blog posts that have the questions in that laid out from the Kaiser Watch series when it's launched, and also the direct links into the YouTube where you can listen to the different segments at your own leisure.
All the best for the new year, John.
Thank you, Jim. The same to you, and I'm happy that you're willing and able to continue our collaboration as Kaiser Watch.
We've been talking with John Kaiser, his website, Kaiser Research. I'm Jim Goddard. Happy New Year from both of us.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HoweStreet.com. Discovery Watch is a production of Howe Street Media Incorporated.